Hello, I'm Grace. Global financial markets are experiencing significant turbulence following the announcement of the first monetary policy decision under the new Federal Reserve leadership. In the results of the first Federal Open Market Committee, FOMC, meeting led by Chair Wash, the U.S. Central Bank decided to maintain the benchmark interest rate at its current level. According to reports, this decision marks the fourth consecutive time the United States has frozen rates without implementing any further hikes or cuts. However, contrary to market expectations, this freeze is being interpreted not as a preparatory step for rate cuts, but as a cautious stance of observation with further hikes in mind. While deciding to hold rates steady, the Federal Reserve officially signaled the possibility of raising interest rates again within this year. This ambiguous messaging instilled anxiety rather than relief in the market, leading to a sharp decline in the Dow Jones Industrial Average on the New York Stock Exchange, which fell by nearly 1%. The core factor driving market downward pressure is not the mere fact of the rate freeze, but rather the Fed's stance of leaving the door open for future increases. Chair Wash provided a positive assessment, noting that 5 key economic indicators, including inflation, are generally showing signs of improvement. The improvement in economic indicators serves as justification for monetary tightening, providing the Federal Reserve with the rationale to once again consider raising interest rates. It is noteworthy that opinions among Fed officials remain sharply divided regarding the future path of interest rates. This disagreement among policymakers acts as a factor of uncertainty, making it extremely difficult to predict the future direction of monetary policy. This policy uncertainty in the United States is also placing a significant burden on the response strategies of major central banks, including the Bank of Korea. As global monetary policies reach a turning point, the uncertain moves of the United States serve as a direct cause of increased volatility in the Korean economy. Ultimately, if the possibility of a rate hike within the year materializes, market volatility is expected to persist for some time alongside shifts in global capital flows. It is now a critical time to closely monitor how the Federal Reserve's future actions will move beyond a simple rate hold to fundamentally shift the market landscape. I'm Grace, thanks for watching.